Doug Morrow, thank you so much for joining us here at the PLSA's investment conference. You've been asked to look into ESG in this industry, how important it is and how genuinely companies need to be looking at their ESG.
That's correct, yes. We just released a study with the PLSA. It was published on February 21st. We built a model portfolio to mimic a typical default fund offered by DC Plans here in the UK. And what we found some surprising but also some expected areas of risk exposure. We found that there's a significant tilt in a typical default strategy in the UK towards banks, pharmaceuticals and software companies. So this really brought to the surface what I consider to be some surprising areas of risk exposure, such as human capital management, business ethics, etc. And I think what's interesting is that these issues often tend to get less coverage than things like climate change. So our analysis shows they're every bit as important as climate change over the short run.
So is it your view that ESG is genuinely being embraced, or are companies still paying a bit of lip service, if you like, this is something we have to do, or is it genuinely being seen as actually this should be a crucial part of how we're investing?
I think it's definitely become more mainstream over the last couple of years. I think history will say that right now we're still very much in the infancy, but the market is being driven by a multifaceted demand. We know that retail investors, especially in the UK, are increasingly demanding that their products take into account ESG factors. There's a wealth of evidence suggesting that companies that perform well on ESG metrics can deliver positive risk and return benefits. And I think that's absolutely essential for future growth in the industry, because fiduciary investors are not going to take ESG seriously unless you can show there's a positive risk and return benefit. But I think just given the way the world is changing, impacts from climate change are becoming more significant, water scarcity, many other issues, the business impacts are intensifying. So I think that ESG research can provide insight into how companies are positioned on those themes.
Doug, you found that companies that perform well in terms of ESG have other areas that they tend to perform well in as well.
That's correct, yeah. Again, there's a lot of evidence out there in the literature showing that companies that perform well on ESG metrics generally have higher levels of worker productivity, better use of resources, so better resource efficiency, higher return on capital. So generally speaking, we would argue that companies that perform well on ESG are well positioned to compete in the future.
So this is not only responsible and not only a target to hit, but it's actually a really good investment.
Absolutely. I think since I've been in the industry, the dial has switched from a fiduciary standpoint. Is looking at ESG an abrogation of my fiduciary duty? It's more now, is not looking at ESG an abrogation of my fiduciary duty.
Yeah, because there's great opportunities out there.
Yeah, absolutely, yeah.
So what message do you hope that people coming to watch your presentation take away? Because there's 900 pension professionals here.
My biggest hope is that the report and my presentation helps just to raise awareness about this idea of ESG risk in default funds, and we put forward some recommendations, admittedly high-level recommendations, but nonetheless strategies that we think DC schemes can take to manage ESG issues for their members.
Doug, thank you so much for joining us. It's great to hear your insights.
You're welcome. Thank you.